You alluded to it. We had a bank CEO earlier this week who just said it out loud. Investment banking's been in recession for the last couple of years. It's been really, really tough.
Absolutely.
I hear you communicating the end of it. Can that happen? I hate to be the guy who asks about the Federal Reserve and rate cuts. Can that end without rate cuts from the Federal Reserve? Can we end that IB recession given what you see in the pipeline?
I hear you guys talk about this every morning. And once in a while I say, we don't know. Who knows? I think the path is probably that inflation is past. But, there's a tail. There's a 5 or 10% probability they do 50 in March. Not talking 25, 50, 5 to 10%, right? It's 40 to 60% they do 25 in March. There's also, if you price an exotic, 5 to 10% possibility that we have another hike in us. I kind of did that check thinking of you two guys because it is possible that we either, because every time the Fed talks about it, right, as they did in the reverse in the teens, it tightened up and they didn't go. Now they talk about it, loosens up. It's like, okay, we don't want to have the Arthur Burns bit. We don't want it to get away from us. So we're gonna do it when we're ready. I think the big picture though is they're gonna start lowering at some point. When they're ready, they're going to be prudent, they're going to be thoughtful, and that kind of predictability is very good for the core investment banking business because you have these financial sponsor portfolios that have been locked up that need to be liberated. Some can go in continuation funds, some can go to other sponsors, but some have to go public or be sold. And then the corporate dynamic was folks are ready to get going then with 3 years of pandemic. There's always going to be an election, there's always going to be macro, but I think the core investment banking activity that we have known with real cost of capital, traditional corporate finance like the mid-90s, I think it's going to come back.